Alright, guys, welcome back to episode 2 of our series, the higher time frame components. So, in this video, we're going to be talking about number 2 on our list, know why price is moving. So, with that said, what we have here is the XY 3-month chart. So, let's dive deep into the topic of today, which is know why price is moving. So, like I've said in my previous videos and in this video that I'm going to release, I said price moves for only two reasons. Now I'll take that again. You need to know why price is moving, and price moves for only two reasons. So reason number one is price moves to take liquidity below old lows and above old highs. So this is a previous low, price took the liquidity and expanded to the upside, took the liquidity above these highs. So that is reason number one, price move to attack liquidity above and below old highs and lows. So the second reason price moves is to do what? To balance imbalances in price, which is your fair value gap. So when they create a move like this, you create a low, you create a new high, and they take the liquidities below this low and break above this high. Now they've successfully created a range, and inside of this range from this low to this high, there will be what gaps, pockets, like imbalance in price that was created when this impulse move was happening. So now the second reason price moves is because they will now come back to fill imbalance, because at every point in time the market is trying to maintain a balanced environment for both the buyers and the sellers. Because if there is excessive one-sidedness in any asset class, then that's where you see those heavy crash or heavy corrections in price. So what they will do is they'll come back and fill those pockets before expanding to the upside. So that is the second reason price moves. So let me write some notes. So okay, okay. So price moves for only two reasons. One, which is to attack liquidity. To attack liquidity above old highs and lows. Let's put it that way, old lows. Then reason number two is to balance imbalances in price. Brackets. FVJ. So these, okay, excuse me. So these are the reasons price moves. These are the only two reasons price moves. So price will only move to do what? To attack liquidity above old highs and below old lows, and to balance imbalances in price move, which is fair value gap. So once you're aware of this, you're aware of why price move, then you can now use that awareness when analyzing the higher time frame. So if you look at this DXY chart, if you look at the chart, you will see this behavior in price. You see this behavior, this reasons why price move, you see it. So you can see it down here. Price did what? Took this price took this liquidities below here, which is the sell side liquidity, and expanded to the upside, and after that they took this buy side liquidity. Now this buy side liquidity they didn't just take the highs, they actually broke and expanded away from the highs, creating this impulse leg here we have here. So what they would then do is to come back and fill the gaps. You can say this is the first gap. You can say this is the first gap, came back and they fill it, and this is the second gap in price. They came back also to fill it up to the 50% before moving to the upside. Now, before they move to the upside, you can see this low here. That's the low, old low. They took what liquidities below it into the fair value gaps. Now, they accelerated, they rallied to the what? They expanded to the upside, taking out what? Buy side liquidity. Now, after that, what did they do? They came back again to fill the pockets, which is the fair value gaps that is left behind. You can see they came back here again, fill the pockets, and this is the second gap we have here. They fill it. So what can we expect again? We can expect a what? A rally to create a what? A new high. And also you can see this low here. Before they fill the second fair value gap, they took that's liquidity, and now we can expect them to attack this. So with that said, this is the reason why price moves. This is the reason why price moves. And once you understand this, you can then what? Use that understanding at the back of your mind when coming to look for what? Higher time frame analysis. So with that said, we can look at this trade example. This trade example I took, which is Hero AUD. You can see here, price expanded on the left side. Price expanded first, came back, filled this gap that was left when price was going up. Then price expanded again to the upside without creating any gap, but they left lows, highs, lows, high, and they came back and they took this low. So immediately they take the liquidities below this low, Then I looked for a trade setup inside here. So if we go to the daily, you see now on the daily you can see the fair value gap that was left behind when price was expanding, and they created a low, then they expanded away from it. Now they came back in the future to the fair value gap once, expanded, came back again, took the liquidity, expanded. Now they are back again for the third time. And if a level is tested twice before and it's coming back to the level again for the third time, that move is always very strong. So now they came back, they took the liquidities into the fair value gap on the daily and they expanded. So that is how this trade idea was initiated. That was how this trade idea was initiated. And I'm currently on this trade, and my entries were somewhere around here due to the limit order I set was no hit. I was expecting price to come down all the way to this low, but it didn't. So I used a market execution to enter somewhere around here. And let's see. So you can see Euro AED and currently in this trade. So with that said, I hope I've been able to share value and you find this video insightful. Thank you for watching to the very end of this video, and see you in the next episode. You can watch it once, twice at your own pace. Just watch it at your own pace and it will be good. Alright. See you guys on the next episode.